Welcome to Insights into Insurance from the A-Team at Americana Insurance Group. All information provided is educational in nature and not intended to be acted upon without first consulting the appropriately licensed professional.
It's a Saturday morning, and that means it's time now for Insights into Insurance with Americana Insurance and Tom Sorensen in studio on this Saturday. Good morning, Tom.
Hey, good morning, Mike. A little bit nicer Saturday morning than last week, huh?
Oh, man. Yeah, I always say if you don't like the weather, just wait a day here in Minnesota, and it'll change. And it's a nice-looking weekend.
Yes, exactly. Boy, do we deserve it.
We're going to talk about some different types of insurance policies, but this is going to be a fun program today because it's going to be more of a answer quiz time, and we'll see how smart I am.
Yeah, Mike, you remember back in high school when all of a sudden your teacher would say, "Oh, everybody close their books, pop quiz."
Yeah.
Right?
You hit me with it this morning. It's pop quiz time.
It's pop quiz time for Mike Whitus here on insurance, on personal lines quiz time is what we are going to go over. So we're going to have some fun here. I won't grade you.
Okay. Well, I'm not very good at doing testing. So he literally, folks, just handed me the questions, so I didn't even have time to cheat on this thing. So let's here we go. It should be fun.
Knowing you would have cheated.
Yeah, I know. Slap my hand and hit me with a yardstick. Oh, we can't do that anymore. All right, here we go. Here's the first question. Which of the following is not an underwriting criteria for a homeowner's policy?
Yes, and is it A, whether the home is owner-occupied or not, B, the age of the building, C, the amount of the loan on the home, or D, the proximity to brush?
I'm going to go with D on this one.
D, the proximity to brush. I need a gong or something. Okay.
All right.
That is wrong. Yeah. The actual answer is the amount of the loan on the home is not a right underwriting criteria. Reason why is whether the home is owner occupied. Obviously, if it's owner occupied, it's a much better risk than it is a unoccupied. Okay. You know, a lot more things can happen with an unoccupied. The age of the building, obviously. The older, I shouldn't say this because some people will argue this, but obviously the older the building is, a lot of things can happen more, might be copper pipes instead of PVC, things like that, okay? Proximity to brush. Well, that brush could be, where a fire could happen or something. So, truthfully, loan on the home shouldn't have any underwriting criteria on it. And, also, too, Mike, when I say a risk, okay? Do you know that us agents, a little secret, we call everybody different. We call them risks, okay? They might be good risks, they might be bad risks, they might be average risk, low risk, high risk, okay? But that's, so when I say risk, that's the insurance company looks at the person or family or house or anything that they're insuring, they call it a risk, okay? Again, could be a good risk, but they're putting, you pay a premium and the insurance company gives you a promise that they'll pay this if certain things happen.
Right.
Okay. So just to kind of let you know, if I use that word, that's what I'm talking about.
So I could be at high risk for failing on this.
Well, so far you're 0 for 1.
All right, let's go to number 2. Homeowners policies can be written on which of the following types of living units?
Yes, and there is 4 possible answers here. Is A, a single dwelling family home. B, a multiple family dwelling up to 4 units if the owner lives in one of the units. C, a townhouse. And D, the all of above answer.
All of the above.
Hey, ding, 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 ding.
Oh,
You're
I'm 1 for 1.
Yeah, you're 1 for 1, 50% so far. Yes, basically, homeowners policies it's actually what we call a form. And anything more than 4 living units would be considered, then you'd have to get into more of maybe a commercial type of policy, yes. And then also too, otherwise some might say, well, I could have a homeowners or a renter's policy if I'm living in one of those units. Or yes, you can. Okay, but and that's the other thing is people don't realize renter's policies is actually a homeowner's policy, which doesn't sound right because when you rent, you don't actually own the home, but it falls under that criteria with an insurance policy on a homeowner's. So,
and if you are a renter, you need to get renter's insurance. A lot of people say, well, I'm renting and my landlord's got insurance, so I don't have to worry about it, but that is far from the truth.
I hear it all the time. I don't have anything anyway. Well, you think about it. Okay, you might not have much, but what if something really happened? But the other thing is there's liability coverage that comes with that. Okay, so if you might have a fire or something, and you might have $10,000-$20,000 worth of goods that you might lose, but also if someone sues you for something, there's a liability coverage underneath those renters' policies too.
And as a renter, you should always check with your landlord to make sure that they have the proper coverage.
Exactly, yes.
All right, we're talking with Tom from Americana Insurance on our Insights into Insurance program, and we'll see how smart I am. And I'm not an insurance agent, but that's why I leave it in the hands with Americana Insurance.
You play one on the radio.
There we go. Americana Insurance Group is providing a homeowner's policy to Mabel Rush. Mabel has worked as a housekeeper for a couple of homes for the last 5 years. She has decided to form a company and filed the doing business as Mabel's Merry Maids. She has asked Americana Insurance to provide her coverage on her homeowner's policy in the event the company gets sued. Which of the following is a correct answer in terms of this coverage?
Okay, the options are A, there is automatic coverage on a homeowner's policy because she is really operating this business as an individual and just filed a DBA, not a separate legal entity for doing business. B, there is no automatic coverage on a homeowner's policy, and the business pursuits endorsement would not cover the company as it is a business owned or financially controlled by the company. And then C, there would be coverage for Mabel's homeowner's policy by naming the business name on the homeowner's policy. So which one is correct?
I'm going to go with B.
Ding, 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 ding. All right, you're doing well, Mike. There is no automatic coverage on a homeowner's policy, and the business pursuits endorsement would not cover the company as it is a business owned or financially controlled by the insured. So basically what they're saying is if Mabel was working for another company, let's, I don't know, ServiceMaster or something as a housekeeper, okay, she would be covered under their policy, okay, but because she's operating a business, she would not be covered under her homeowners because any commercial or business is excluded under a homeowner's policy. Now, there could be such a thing that some homeowners could potentially, now again, this is by company, could potentially add them onto a homeowner's policy if certain gross receipts are under a certain amount and add that on. But a typical homeowner's policy, as it sits, is not covering that exposure. Now, the other thing is, it says she was cleaning houses for the last 5 years. She couple homes, right?
Right.
That's still a commercial business exposure that should have been covered before that. Now, we said that American Insurance Group is providing this for Mabel Rush. It's a fictitious name, okay? So just so I'm not using anybody's name, it's okay.
And that is important, Tom. When you this example, for example, it's a housekeeper, someone that's going into someone else's home and cleaning. If you do have a housekeeper, we're not singling out any individual, this is a fictitious case, but if you have someone coming into your home, you should check with that person, make sure they are covered.
Right. You know, there's many things that could happen. You know, I always think of, what if they left a faucet on, or maybe
the house floods.
Maybe they're doing clothes or something, and the house floods, right? Who's going to pay for that? Well, if they don't have coverage, it's going to be it could be an issue where your company might not pay either because it was done by somebody else. And, I mean, there's just a lot of things there, or I could probably write a book on some things that have happened, but I mean, not just housekeepers, but things that can happen. Yes. Right. Or let's say you break that piece of china that was worth $2,000 or something, something like that. So
we're talking with Tom from Americana Insurance on our Insights into Insurance program. It's Quiz Day Saturday, Tom. We're going to take a quick break, and we come back. We're going to hit up another question and see if I can get it right.
This is fun. I like this.
This is Insights into Insurance with Americana Insurance, and we'll be back right after this.
Nationwide is on your side. You have a side that is retired, playing tag and getting tired. A side that owns your own store. Looks like you need to explain some more. That's why there's a Nationwide. They help protect and grow your many sides. Nationwide is on your side.
Nationwide Mutual Insurance Company and Affiliates, Columbus, Ohio.
For all your many sides, there's Nationwide. Call Americana Insurance Group in Albert Lea and Wells today.
Welcome back. You're listening to Insights into Insurance with Mike Whitus and Tom Sorensen from Americana Insurance. And as we last left you, yes, I had to put my hat on. It's Quiz Day Saturday here with our Insights into Insurance program, and we're going to continue on to see how smart Mike Whitus is on insurance.
So far, you're 2 out of 3, Mike.
Well, that's good. Now let's go to the next question. Flood insurance is an important consideration for an individual that owns a home. Typically, how is flood insurance provided?
And the answers are, or the potential answers are, A, is it an endorsement to the homeowner's policy? B, is it automatically covered on a homeowner's policy? C, is it a monoline policy typically written through the NFIP, which is a National Flood Insurance Program? Or D, it is provided under the property damage section of a homeowner's policy?
Kind of a tricky one, but I'm going to go with C.
C, you are correct again. You're at 75% now, Mike.
Good deal.
Yes, it is. You cannot buy, and flood insurance is not part of your homeowner's policy. And if you and it's very wet out, okay. And so right now, let's just say somebody says, "Oh boy, I'm really worried about a flood because of what's going on out there." Well, right now, if you were to buy one, typically it's a 30-day waiting period before it would take effect, unless there's certain criteria, like if your mortgage company requires it or something like that.
Those folks that are in low-lying areas, I know with all of this moisture, earlier this week we had the 9 inches of snow. Things are really melting this weekend. What about sub pumps? I mean, if those folks that have sub pumps in their house and all of a sudden the power goes off or the motor burns up, is that automatically covered under a homeowner policy?
No, it's not automatically covered. Many people think it is, but it is an endorsement to the policy on a homeowner's. I say this, and I would say that 99% of our homeowners policies have that coverage. It's a pretty important coverage. It's probably one of the most used coverages, and you can usually buy them in $1,000 increments. Example, I think we have anywhere from $1,000 to $25,000, $30,000 worth of coverage that we have. And I've had it happen to my house. I live on a hill, actually. We have 2 sub pumps, and I've had it claim, and it does not take long to go through a large amount of money.
Is there a waiting period on that as well, Tom?
There can be. Right now, because of the situation, if I were to say, hey, this individual wants backup water, is basically sewer and water backup, they usually will say they either do not allow you to add it on right now, or they have a waiting day period too.
And you never know next spring what's going to happen with the weather conditions, but I think very important for homeowners to take a look at your insurance policy.
Absolutely.
And make sure it's covered.
Right, exactly.
There's lots of folks that have carpet in the basement, and that can be a mess.
It can be a mess, yep.
We're continuing with our Insights into Insurance program. It's Quiz Day Saturday here on KATE with Tom Sorensen. And let's go to the next question on the list here, Tom. And it says, Americana Insurance Group's insured owns a single-family home, lives in a homeowner's community. Recently, that is, there was a liability claim that occurred in a visiting golfer who sued the association. All of the owners are being assessed $5,000 for the claim. How would the homeowner's liability form respond to this claim?
All right, and the potential answers are A, some homeowners policy exclude loss assessment claims under Section 2. B, some homeowners sublimit loss assessment under Section 2. C, some homeowners have endorsements for loss assessment. And D, all of the above.
And again, I didn't cheat on this. I have no clue. I'm just going to say all of the above.
You are right. Ding, 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 ding.
The only reason I said that is it all Section 2 information.
Yeah, well, that Section 2 is part of your homeowner's policy, and so that's one thing that a lot of people don't know that. But so let's talk about this. So, this might sound like a gated community, but that doesn't necessarily. We have a lot of homeowners associations in Albert Lea. Your condos, your townhomes, things like that are association. Many of them are associations. Okay, well, normally you have a coverage on your association for your buildings. Okay, might be the outside structure and things like that, and some liability. But what if that isn't enough coverage? Okay, then that's where they can assess a claim. And for these people here, it's going to be a $5,000 assessment per person or some homeowners insurance excludes it, some have little bit coverage in it, and some can be added on as an endorsement. Well, so know your policy, know what you have. It happens. Okay. Example, let's just say your house or your roof has, in a condo association, who knows, it could be a $100,000 roof, okay, and for some reason you only got coverage of, let's say, $60,000. It wasn't enough insurance on it. Well, then they can go and assess the other $40,000 onto the homeowners or on the people that live there. So you gotta know so you can get that coverage for that assessment.
That's why you're listening to Insights into Insurance with Americana Insurance, and that's why you need to stop down to Tom's office. Give them a call as well. You can go out on the World Wide Web, Tom, and take a look at, just set up an appointment and feel free to bring in your policy, and you don't have to sign up with Americana Insurance, but at least they're going to give you some ideas of what to do.
Correct. We're going to educate you. Just like, you know what, you're 4 out of 5. You've been listening too much.
I try to listen as much as I can, Tom. That's going to wrap up a fast quiz day Saturday here with our program of Insights into Insurance with Americana Insurance. Tom, enjoy this nice weather the next few days anyway, and we'll see you next Saturday.
Hey, you get a star today, Mike. Thanks.
All right, I'll put it on my refrigerator when I get home.
All right.
That's Tom with Americana Insurance, and that's been our program on this Saturday, our Insights into Insurance here on 1450 KATE.
You've been listening to Insights into Insurance from the Americana Insurance Group. All information provided is educational in nature and not intended to be acted upon without first consulting the appropriately licensed professional.